But Amazon rounding out a week of big tech earnings, reporting a strong holiday quarter, but disappointing investors with its outlook for the current quarter. The company also announcing plans to boost CapEx to just around $100 billion this year, largely due to AI investments. This coming after Google and Microsoft also announced plans to spend billions on AI. Joining me now, we want to bring in Tony Wong. He's T. Rowe Price Science and Technology Equity Strategy Portfolio Manager. So, Tony, we just got the analyst side of the read that we've heard from big tech so far. I'm curious, just from a portfolio manager perspective, did it live up to those expectations and put to rest some of those valuation concerns?
Hey, well, you look at Amazon, I think more long term, there's a few things that are really going well for the company, and they're kind of happening at the same time. So one, retail margins and kind of that utilization of their infrastructure for e-commerce is getting better. So you see that kind of march up quarter over quarter. And especially if we get a healthier consumer, that flywheel of like same day, next day should be improving and expanding operating margins and EBIT. So I think that's one. Number two, like AWS continues to grow pretty well, like 19% at that scale is impressive. And especially we get more AI tailwinds and they get more capacity. That's a second good driver. And then the third, I would say, is ads. Like that's a really high margin, high growth business. So when you have like those three things kind of all working well, I think that this sets up well for the longer term. In addition, I think when you think about where Amazon is and their kind of business, it's pretty. It sets up a good industry dynamic where they can perhaps like achieve better synergies with AI and robotics. So I'm really looking forward to hearing more about their chip strategy, how they differentiate themselves versus other clouds, and then how they integrate robotics and kind of drive further efficiencies and pass that kind of cost saving to the consumer.
So it sounds like you think some of the valuations here for big tech are justified following these results.
I think you have to go, kind of stock by stock. Big tech has done pretty well over the last few months, and Amazon's been up a lot over the last quarter. So, I think that you're always going to have some price adjustments, but over the long term, I think you look at like the type of returns that Amazon can earn, and at this scale, like I definitely view it's set up well, especially if like large language models get easier to deploy. The tech proliferates. That's probably good for the cloud. In addition, like maybe you don't need to kind of own the frontier model in order to benefit from it. Especially a lot of the open source dynamics kind of help be a tailwind, and Amazon can really plug that in across their kind of large ecosystem of businesses. So, to me, like when you think about what you need to win in AI, it's probably scale, compute, AI talent, large customer base, good, a lot of data. And, there's a lot of ways that Amazon's well positioned.
Tony, I'm curious how you've been looking at the commentary that we've been getting from big tech CEOs in regards to DeepSeek. And that was very much has been one of the focuses here or maybe of interest for so many investors and analysts here over the last week or so following the revelation and the headlines surrounding DeepSeek. And I think overall, they've been very positive. We heard Mark Zuckerberg talking about the fact that this almost reinforces some of their spending plans going forward. Microsoft CEO Satya Nadella has also been very complimentary of DeepSeek. I'm curious, how do you see that impacting not only big tech, but maybe does it open the door for more investment opportunity beyond the Mag 7 when it comes to tech?
Yeah, I think that's a great question. A lot to, we're still learning about a lot of this, but the way I see is that tech, the evolution of tech is always to drive down costs and increase adoption. And I think that definitely is good for the long term. A few months ago, everyone was debating is there ROI in AI, and here with costs coming down dramatically, potentially in some ways, you can kind of say that is bullish now. I think that this will definitely help proliferation of the technology of LLMs, and I think there is this like kind of debate of like who benefits the most, and I do think that in some ways this opens up other players that were maybe subscale or too small, or maybe the apps were just too expensive to develop, that this opens the door for more innovation. And as a result, like, you could see a new kind of crop of companies that kind of do well behind this. And you're also seeing like the app layer really kind of inflect here. I think you saw Palantir earnings recently, and that just shows like a really nice inflection at the app layer. App loving over the last 6 months as well. So as kind of AI gets easier, more ubiquitous, you could see then stuff outside of the Mag 7 do well as well.
How about the AI networking side of it? Are there some plays there when you take a look at Sienna, when you take a look at maybe Coherent, just in terms of the fact that they could then leverage off of this and the wider adoption?
Absolutely. So I mean, you think about like where we're going with frontier models, like you want to pretty much cluster as many of them as you can, these GPUs or custom silicon. And kind of the more you cluster them, the harder it gets though, because a lot of times you need higher quality interconnects for the model not to like stall or break down. And so, I think that the networking aspect of it is definitely where a bottleneck is in terms of delivering AI infrastructure. So, I think that those stocks I've seen have done well. They're probably well positioned, and we're going to need to see a lot more innovation at that layer.
All right, Tony, always great to get your insight. Thanks so much. Have a good weekend.